hello and welcome to ET Now, Startup Central, India's only dedicated show for startups, technology and entrepreneurship. I'm Nayantara Rai and the big focus today on the show is the Finance Ministry that's finally set up a panel dedicated to fintech. This panel, chaired by the Secretary of the Department of Economic Affairs, Subhash Garg, is going to look at regulatory challenges for fintech and how it is that the government can work with startups in key areas, for example, housing for all. They've even indicated that new age companies could be allowed to work with the GST network or the GSTN, maybe Aadhaar too. So fintech is really a big focus for the government now. And look at what's happened in the past, for example, with UPI payments that are witnessing massive adoption as well. Several MSME lending startups that have come forth, payment banks that are looking to take banking to the masses. So joining us today on Startup Central, we are first being joined by Harshil Mathur, the co-founder of Razorpay, and I believe in moments from now, Sanjay Swamy, the managing partner at Prime Venture Partners, will also be joining. But that's Harshil for you on your screens. Good evening, Harshil. Before I get down to the specifics, you want to tell me how it is you, a representative of startups, a representative of the fintech sector, reacted to the constitution of this committee and that very fact that it's now under the government's radar?
Yeah, no, we truly welcome the step. I think it's a step in the right direction. Ever since Mr. Jaitley announced that such a committee will be formed, we are looking forward to when it comes down to it and what will be the structure around it. I think it's a very positive step. Fintech has been playing an increasingly important role in the way the economy is shaping up. And it's encouraging to know that the government is accepting that and also working towards further improving the status of fintech startups in the country. So we definitely welcome it.
Well, obviously it's better late than never. So while India tries to not miss the bus on fintech, let's be honest, we are extremely late. Look what's happening in the United States in the B2C, in the B2B categories. Look at insurance. You can now get an insurance. You can sign up for insurance without any paperwork either, but you don't have Indian rules which allow that. So while you may have the committee, you're also going to need the RBI, for example, to play ball. You're going to need the market regulator, SEBI, to play ball. And I'll expect you to be honest here. Do you see big changes on the anvil? Do you think that's even possible, let's say, before the next general election of 2019?
I think regulatory changes in India definitely take time. We don't expect that just formation of committee or change the regulations in 3 to 4 months. It will at least be a 6 months to a year effort, or maybe even longer. But it's a step in the right direction. So far, fintechs didn't have a seat on the table. They didn't have any way to influence the regulations or the changes that are happening towards the regulations. While they were, of course, RBI follows an open consultative approach to most regulations, it's still very difficult to make your voice heard. So such a committee will at least ensure that we get our voice heard. We can give our message back to the government, which message can then be passed on to the regulator, and the regulator can keep that in mind when certain regulatory changes happen.
I should hang in there now. Sanjay Swamy is joining us. He's, of course, a managing partner at Prime Venture Partners. Good evening, Sanjay. Let's get your initial thoughts first. So this committee has been set up, is going to look at fintech. But once again, it's only primarily made up of bureaucrats. It's made up from regulatory bodies. Do you think that, it's a missed opportunity that those in fintech are not part of it? Or do you think that's going to be perhaps more of a consultation process?
I think this is the first step, and it's a welcome first step. Clearly, we expect that, I did notice that one of the key points mentioned was that they will include people from the private sector. So that's also... Can you hear me?
Yeah, I can hear you. Carry on, Sanjay.
So one of the big things is that they will have people from the private sector, and I'm hoping from the startup ecosystem. As Harshil said, RBI has been pretty transparent with their policy process, which is an open consultation paper, which they eventually get feedback from. So I think a lot of that is going to happen as well. But first of all, the most important thing to celebrate today is fintech and entrepreneurship is now really seen as a first-class citizen and as a means of, and as a vehicle for the government to leverage, to transform lives for people in India, whether it's for consumers or for the SME sector, which have been sectors that have been, under-included or under-penetrated from a financial services space, that have been credit-starved, that are, very light on data, have a thin file problem, and therefore ineligible for First is the acknowledgement that this is a serious issue that fintechs are being invited to help solve. And as India moves more digital, this is the only way in which we can actually resolve these issues.
Okay, Sanjay, I'm going to ask my producer to reconnect with you, or we can hear you as perils of live television. He is joining us via digitally, so let's try and get you on a better broadband connection. So, Harshil, let me come to you. We're talking about fintech. Do you want to first share with us the kind of regulatory roadblocks, the kind of hurdles you at Razorpay have had to face? And has life gotten easier since this government's digital push?
Definitely, I think the RBI has come up with a lot of new regulations in the fintech space in the last 1 year. Most of them have been in a very positive direction. Setting up a UIDAI, in fact, the Aadhaar eKYC process, it has eased the life of a lot of fintech startups in the ease of doing KYC. I think one directive while setting up this committee that came from the Ministry of Finance is also to set up something similar to an Aadhaar number for enterprises, which also is something that we see as a very positive step in the right direction. In the next 1, 2 years, 3 years, if something like that can come from enterprises as well, it will ease pain of B2B startups like us when we onboard businesses, and the pain of doing KYC for businesses can also be brought down.
Okay, I believe Sanjay is back with us. So Sanjay, I want to also ask you about this. Now, when you looked at some major and landmark rollouts of, for example, the Goods and Services Tax Network, the UIDAI, the Aadhaar, it went to the big boys. Like, for example, it was Infosys. I don't expect you to talk about that, but there has been, for example, a lot of flack that has also been received for the way the GSTN works. So do you think this is also a great idea that maybe allow younger blood to come in, people that understand what is the need of the hour? Do you really see startups being involved in this stratosphere, in the fintech stratosphere henceforth?
So I think, you will have places where you need several of them, several startups. But I think at the platform level, from a government perspective, it would be prudent to work with the larger players. So I think the government has done the right thing at the platform level. However, I think what we would like, as we are venture capitalists who've invested in, several fintech startups in the sector. These are companies that provide point solutions that build on top of the government platforms such as UIDAI, such as UPI, such as GSTN. And, I think a consistent policy and easy access to the APIs so that we can build these value-added services for, giving a better solution to the market, that is very, very important. We've had a lot of inconsistencies during the early days on the rollout of, who has access to Aadhaar for eKYC, who doesn't have it, etc. And so I think it's very important to have an organization that will administer and manage the access of these APIs to the startup ecosystem in a very consistent manner. I think if we do that, we'll be, several years ahead of where we are today.
Jumpstart and move forward, leapfrog a few years from now. And I'm going to ask both of you this question. Sanjay, I'm going to begin with you. While we deliberate and we say, yes, it's great that the government's looking at fintech, we've also got to be very careful, especially in this era of Nirav Modi and Punjab National Bank scams, that, we don't, that we're cautious as well. Like, for example, look at the lending club example of San Francisco. It was a massive scam that unfolded. It was on page 1 from New York Times to Wall Street Journal to Financial Times. So, we shouldn't jump ahead also too fast, right, Sanjay?
Have a counter view to that. I think actually the startups in India are much more rigorously vetted and are much more, I would say conservative because of the strong regulations we have in India, right? So nobody's saying we should fundamentally change the regulations. I think we're talking about working within the regulations, but also, not having a sort of a lot of bureaucracy in availing and getting the benefits. So case in point would be Aadhaar, right? Or UPI, right, where we've actually built these fantastic railroads, but we are not making them available to everyone. And as a result, people will take a photograph of my Aadhaar and be able to do anything with it, rather than giving open access to eKYC as an API. So I think the startups, are absolutely, all of us are, serious people in business. We intend to build companies for the long term. Nobody is trying to, bypass the systems. And if anything, the startups don't have the legacy. So it's going to be a lot easier to oversee and to enforce from a regulatory perspective than in some cases the incumbents.
Harshil, coming over here, how do we ensure, I'm not talking about you, but how do we ensure guys like you remain in check, that we don't see a lending club type incident unfold in India? We have to be careful of that as well. Do you, as a startup and as someone in the fintech, concede that?
No, I understand that in every space, there'll always be some bad player. But just because there is a chance of having few bad players, you can't burden everyone with this very big red tape and very strong regulatory hurdles. So you definitely need to still have an open framework. You need to listen to the voice of startups. I'm not saying not every idea that startups pitch in would be accepted, or every regulatory changes that startups ask for will be accepted. But at least with this panel, we get a seat on the table. We get to tell them that this is what would make our life easier. Of course, the government could take some of it, the government could refuse some of it, but at least it's a step in the right direction. And overall, over time, we need to figure out ways that fintechs can contribute in a better way, in a more significant way in the Indian economy, if the economy has to grow further from here.
Big avenue could be housing for all. Sanjay, come in over here. While we still talk about, housing for all, moving on from kacha houses, there's also a debate on whether you should buy, whether you should rent. That's a massive space for fintech. Modi Care announced in the budget. Do you really think, for example, the platform of Modi Care could be given to startups? There's already talk of Nandan Nilekani being in the race for it, but do you think that would be a prudent way, startups getting a chance to build Modi Care, for example, or something for housing for all?
So I think what I'm looking at is, let's have, consistent policies. And if you think about UPI, for example, the core platform was built by NPCI with an outsourced contractor. It could very well have been a startup. In this case, it wasn't, right? But I think the bigger thing was that, startups like, EasyTap or Razorpay or JustPay have built solutions on top of UPI that have which are the reason why UPI has scaled, right? It's not just the platform, but it's the business applications layered on top of it. So I think really, I'm not looking at, I'm certainly looking at startups being involved, because that's where the innovation will come in to define these platforms and to make sure that they're done with a data-enabled layer, because that's really where, financial services can be delivered. But really working in partnership with the government to ensure that regardless of who implements the core platform, the platform is made available through application programming interfaces to the technology, startup companies, right? And the big companies, right? Fintech is not necessarily about startups. It's about using technology for financial services.
I should come in over there. Do you agree with Sanjay on this point, that the basic platform, whether it's a GSTN or the UIDAI, or let's say now a Modi Care, should first be built by a big known player? There's also, of course, considered to be safer by the government, and then maybe the last mile connectivity can go to the startups. Do you think that's the right approach? And do you think, and do you honestly believe that the government will allow that?
Yeah, I think so far most of the platforms at the platform level have been built by large players, whether it's Infosys or any of the large concerts. And there's a reason for it. They have the track record, they have the history, and at a central level, you can't really take a bet on a young startup. And which is not something that I completely agree with. There are startups in this country who can be burdened with that. But if the government wants to play safe there, I can understand that. But at least at the last mile connectivity is something which startups are really good at. Taking the base layer, building solutions on top of it, and then packaging and delivering it to masses. That's what startups have done really well, whether it's with UIDAI, whether it's with eKYC, whether it's with UPI. And recently, even with GSTN, there are startups doing a lot of interesting stuff on GSTN. The only thing that startups ask for is an equal standing. So if there are conditions put on it that you should have 3 years of profitability, or you should have 8 years of operational record for being part of the ecosystem, then you are definitely cutting startups out of the picture, because very few startups would meet that criteria. As long as the criteria is open and equal, that pitches startups and enterprises at the same level, I think that is enough. That is what we expect from the government. Rest the startups of this country are well suited to take care of.
Sanjay, I'm going to give you the final question. You also act as a venture capitalist. Are you seeing this maybe as a new opportunity? You will be looking at startups because clearly the government is headed in this direction. And having said that, while this committee is chaired by the Department of Economic Affairs, is the RBI, which really has to come on board, has to really open up the fintech space and change a whole host of regulations.
So I think the RBI has been very forward-thinking so far, and I don't have any reason to believe that they will not be, more open. And they've only progressively been opening things up, right? But at the end of the day, they are the regulator, and they have to do things that are prudent. I think one of the things that could move this forward significantly would be to look at what Singapore or Abu Dhabi have done, and a few other governments, where they've created a regulatory sandbox that allows fintechs to perhaps offer some new solutions for n number of users, up to so much amount of credit provided, and maybe for up to 2 years, and then study them and see how they have performed before they make that mainstream, right? So that will give a best of both worlds, because if at all there's any risk, the risk is bounded, right? However, what would be important with the sandbox is to also ensure that there is a transparent path for if something succeeds, how does it become mainstream? And once that's there, venture capitalists like us and entrepreneurs like Harshil and others would be very happy to roll the dice and actually to try to build something big and exciting here. I think the opportunity is there and the time is now, and it's really exciting to see that the government is stepping forward here.
Okay, stepping stones, better late than never. Fintech certainly on the government's radar, and at this juncture, I'd like to thank both of you gentlemen for taking the time out and joining us here on Startup Central. Well, with that, we have to take a short commercial break. On the other side, we'll talk about the latest funding rounds that we've been seeing when it comes to the startup space. Stay tuned. Welcome back. You're watching Startup Central here on ET Now. I'm Nayantara Rai. Before the commercial break, we were talking about fintech, how it's come under the government's radar thanks to the new committee it's set up, which includes, and it is headed actually by the Secretary of the Department of Economic Affairs. Well, from fintech to funding, seems like things are certainly hotting up for startups in the investment space. So if you look at the month of February alone, it recorded a massive spike with 44 deals involving over $600 million. While large deals of Ghana, Swiggy stole the limelight, the number of deals has also gone up. And that's something that we want to take forward and discuss with Arun Natarajan, the founder of Venture Intelligence, who actually compiled all of this data for us to help us decode the funding activity as well. Hi Arun, good evening. Always a pleasure chatting with you. So thanks for joining us here on ET Now. So in February, your data shows that a total of $602 million had been raised by startups. How do you read that data? Are things looking better?
Definitely. In terms of the number of deals, in February, it represents a 12-month high for VC investment. So that's clearly building on the last quarter of 2017, which was quite strong as well. So that's quite heartening. In terms of the value of the deals, that's really rocketed up. We are talking about February this year to last year as much as 2.5 times in terms of the value of investments. Now, whether that can be sustained is a different question, but clearly in terms of the number of investments, going up, that's a healthy sign for the ecosystem.
But Arun, be fair over here. When we look at this data, should we not jump ahead of ourselves? Should we really be celebrating it? Because if you see what's happened with Ghana, Swiggy and Lending Card, they make about $300 million of this $600 million.
Very true. So the big ticket deals are indeed dominating, and within the big ticket deals, if you see the investors who are pumping in the money, these are actually big strategic investors who are also co-investing with the previous VCs there, but clearly they are in the driver's seat. We are talking about players like Tencent and Naspers, and of course, in the previous month we saw Alibaba invest into, Big Basket as well as, Zomato. Clearly, the big ticket deals are ruling, as you rightly point out, but, just to counter that, the number of investments, which probably is more indicative of the activity levels, it's good to see that also going up. So I think overall, while the mix of investments, is indeed changing, and the mix of investors too, we are seeing Chinese and South African and so on. Domestics are not yet, kicking in as much as, we saw, in 2015. But, I think overall, from the doom and gloom of 2016, it at least, says that we are much better off than, where we used to be startups wise.
But has sanity come into the space at all? Do you think the valuations that you're seeing today are far more rational, that they make sense and ensure that there's not going to be a bubble?
Oh, clearly, in terms of the kind of deals that we used to see, 2015, those are definitely not happening today. We are seeing far more rationality, and especially if you look at investments in the e-commerce space, just to take one example, Udaan, that received $50 million of funding. They are not your B2C typical e-commerce play, so they are a B2B2C in that sense. So a lot of focus today is on the B2B segment, and and also just to talk about more about sectors. 50% of investments in February has gone into the B2B side of things, and actually enterprise software is especially dominant. And if we were to include actually some of the fintech B2Bs, with the ratio of B2B to B2C would actually be even more pronounced. So clearly far more rational. We aren't seeing too many of the B2C e-commerce yet.
Okay, so that is still lagging behind the B2C e-commerce, but clearly a revival in funding when it comes to the startup universe. Arun Natarajan, always a pleasure chatting with you. Thank you so much. And with that, folks, we're completely out of time. So from the entire Startup Central team here on ET Now, I'd like to thank you for watching this show.